Hi, everyone. I'm Tanya Rivero. U.S. stock markets suffered a big drop Wednesday amid fears driven by the bond market. As Lisa Mateo reports, investors see more gains in the short term than they do in the long term, a common signal of an oncoming recession.
Investors unloaded stocks on Wednesday. The Dow closed down 800 points. The Nasdaq slipped 242, and the S&P shed 85. Sparking the sell-off, a warning from the bond market. Yields on the 10-year Treasury note fell below the 2-year note for the first time since 2007. Market watchers say that inversion means a recession may be coming.
It takes 12 to 18 months for us to see the ramifications of it. So it's too soon to tell what's going to happen at this point. But clearly the activity that we're seeing today could be, or most certainly is, an indicator that a recession might be down the line.
The losses come a day after stocks rallied on news President Trump postponed plans for more tariffs on Chinese goods. But concern about the ongoing trade war persists.
Yes, you know, the positive headlines were there yesterday, but not strong enough to really hold on to any gains today.
President Trump fired off a series of tweets defending his tariffs and bashing the Federal Reserve. The president said the Fed was too slow to cut interest rates in July.
Market analysts point out that it is August and trading volume is lighter, which makes any volatility seem more dramatic.
Experts predict that despite the uncertainties, the markets will still see growth.
Overall, our economy has gotten stronger. Sentiment has gotten stronger.
Investors are advised to think long term and stick it out. Lisa Mateo, CBS News, Wall Street.
And let's bring in Caitlin Huey-Burns, Zeke Miller, and Heather Long. Caitlin is a CBSN political reporter. Zeke is a CBSN political contributor, as well as a White House reporter for the Associated Press. And Heather is an economics correspondent for the Washington Post. Welcome to all of you. So, Heather, give us a deeper explanation of what exactly is driving these recession fears.
Well, the main thing driving them is the trade war. We've seen for a year now that many parts of the world are sick. Basically, their economies are not in great shape in Germany and China and elsewhere. And what's really tipping them over the edge is President Trump's trade war. Those countries are heavily dependent on trade and on exports, selling goods to other parts of the world. And the concern now is, as those other places get sick, is that going to then cause the United States to get ill as well? At the moment, the U.S. consumer is still very strong and is still is showing signs of wanting to go out, wanting to buy. But obviously those tariffs the president now wants to put on just before the holiday season are another strike that could keep consumers home.
And so, Zeke, President Trump has repeatedly touted economic gains that he has made since taking office. If these recession fears are real, how will the president's re-election strategy be impacted?
That's really the big question, is that it partly has to do with will there be a recession and also when does it hit. History shows that incumbent presidents in times of strong economies do very well, but presidents in times of weaker economies generally struggle. That's sort of the basic rule, and sort of how that applies come 2020 will be a big factor. Yes, consumers now in the United States seem to be doing well. There are the tax cuts that did have a positive effect boosting the economy, but those effects have been largely negated by the by this ongoing trade war. And yes, the president did delay some of those tariffs to allow people to purchase goods at lower prices, prevent those tariffs from affecting prices ahead of the holidays. But they'll kick in right afterwards, and people will start feeling that next year going into an election year if there's no deal with China. So as if this continues on its current path, and if there is some sort of recession, it can have monstrous effects on the president's re-election campaign next year.
And so, Caitlin, what sorts of economic policies are the Democratic candidates offering as an alternative to President Trump's financial agenda?
Well, Democrats running for president have had the challenge of wanting to advocate for change in an economy that so far looks okay, looks good, at least on paper, while not seeming to cheer its demise. So they're kind of walking a little bit of a tightrope. Overall, their message, though, has been that, yes, the economy may look strong, it may look like it's working, but it's not working for everyone. And they've been targeting their messages specifically to the middle class. So they talk about increasing taxes for the wealthy. They talk a lot about student debt and the burden that that has on one's own economic outlook as well as the broader economy. And they're also focusing heavily, lately at least, on the president's trade policies, which is interesting because some of them tend to agree with the overall goal, I should say, of being tough on China, of being tougher when it comes to trade. But a lot of them are saying that there is so much uncertainty that the president is creating that is detrimental for people. That's their message. And their message, especially as they're trying to win back some of these Trump voters, is this idea of failed promises. So to Zeke's point, if the economy turns around, you will see that message driven even clearer. Then you have people like Elizabeth Warren, who clearly has experience with recessions, sending really big warning signs about a coming perhaps economic downturn. Now, some have said that that's not quite accurate, but she has been pushing that message, and it seems to be resonating, at least with some that have been attracted to her campaign.
All right. Now, there is a clip I'd like to play from President Trump talking about his decision to delay tariffs on some Chinese goods until December. Let's listen.
We're doing this for Christmas season, just in case some of the tariffs would have an impact on U.S. customers, which so far they've had virtually none. The only impact has been that we've collected almost $60 billion from China, compliments of China. But just in case they might have an impact on people, what we've done is we've delayed it so that they won't be relevant for the Christmas shopping season.
So, Heather, it sounded there like the president acknowledged that U.S. consumers would be paying the price for some of these tariffs. How significant is that?
It was a huge admission yesterday from the president in both word and action that his tariffs are having an impact on U.S. consumers, on Americans. For months, he's been telling us that the only people who pay these tariffs are the Chinese. The vast majority of economists and business owners have said that is not true. That's a lie. And what we saw from the White House yesterday was an admission that, yes, these tariffs could be a drag on the economy heading into the Christmas season, and he backed off. I think what's interesting, President Trump's really taking a gamble here with his reelection next year. If he keeps these tariffs on, keeps going full force, he could be sitting here a year from now with a very weak economy that looks like it's on the verge of a recession. And the person who can make this better is President Trump. If he takes some of these tariffs off, the market would likely shoot up. Business owners would be more likely to invest again. But instead, he just doubles down on blaming the Federal Reserve, telling them to cut interest rates more. The reality is lower interest rates are unlikely to turn the economy around. People are not clamoring for cheaper credit to go buy more cars or go buy more homes right now. Those rates are already very low.
Yeah, and we will get to that in a moment, more talk about the Fed. But Caitlin, I just want to ask you, because you've been on the ground talking to voters, when they talk to you about tariffs and the trade war, how do they believe they will be impacted, and how important is this to them?
Right. I just spent the past few days in Iowa, which is a really interesting test case for this. And I found, talking to voters, that it really depended on how much they had faith in Trump and how much they supported him. So I did talk to one person who owned a farm who was an avid Trump supporter and said that, basically he agreed with the long-term approach or the long-term goal and was willing to continue to back the president. I talked to another Democratic voter whose husband was also in agriculture and said that this is a very concerning issue for their family and that was also impacting her decision. What Democrats have been trying to do when they're campaigning in places like Iowa or places that are directly affected by these moves is talk about how much they would not only address these rural issues, for example, but also how much the president is kind of issuing policy by tweet, they say.
Yeah.
So they want to say that, look, we would provide a little more certainty, even if we agree that we should be tough on China. So they're really trying to show contrast with the president, especially on this issue.
Speaking of issuing policy by tweet, I want to get back to something that Heather said earlier. Of course, just before the markets closed Wednesday, President Trump unleashed on Twitter. He said, "We are winning against China and that China is not our problem." He went on to blame the Fed for raising rates too fast and being too slow to cut them. He said, quote, "Thank you to clueless Jay Powell and the Federal Reserve. Germany and many others are playing the game. Crazy inverted yield curve. We should easily be reaping big rewards and gains, but the Fed is holding us back." So, Heather, what is he accusing the Fed of here? And does it look a little bit, like pointing fingers?
That's exactly what the president is trying to do here, to point all of the blame for the market drop and any bad economic news at the Federal Reserve. Of course, it's interesting, President Trump himself is the one who appointed Jay Powell to be the head of the Federal Reserve. So it's really President Trump's team that's leading the Fed right now. I think the key to remember here is, yes, the Federal Reserve, the interest rates just above 2% right now. That's really low by historical norms in this country. And what you don't see is business leaders at Apple and IBM and other big companies. They are not saying that the reason they're not investing right now is because interest rates are too high. They're saying they're not doing it because there's too much uncertainty from President Trump's trade war. So again, Trump is trying to blame the Fed, but if you listen to either those farmers in Iowa or to business leaders across this nation, their problem is the trade war, not interest rates.
Right, and I'm no economist, but I do hear that when the economy is strong, that is the time to raise the interest rates. So kind of can't have it both ways. All right, so Zeke, President Trump is heading to New Hampshire tomorrow for a political rally. His former campaign manager, Corey Lewandowski, is reportedly expected to join the president amid speculation he will run for Senate. So give us some background, if you will, on Lewandowski and the type of Senate candidate he would be.
Well, Corey Lewandowski was the president's first campaign manager. He's from New Hampshire, was a police officer there, was sort of new to politics, and when he joined onto the Trump campaign in a lot of ways, he was sort of the biggest proponent of let Trump beat Trump, and sort of really sort of organized an entire campaign around the president being this populist figure who was going to sort of campaign that way and make the promises that he made to the American people. He was pushed out, obviously, and had a couple of controversies surrounding him in terms of altercation with a reporter. Whether or not Lewandowski runs or not, and certainly there are a number of people around Mitch McConnell who do not want him to run because they do not believe him to be the best candidate in that race. It is an interesting test of the president's policies there, and New Hampshire is a state the president lost narrowly to Hillary Clinton, very, very narrowly, and is one he wants to go win back. The president's going there in part to try to do that, to turn that around, to create more pathways for him to go back to the White House. But also, it's not lost on him in the White House that and his campaign that Democrats are heatedly contesting that state right now for that state's first in the nation primary next year. So this is also an opportunity to look for it as an opportunity for the president to sort of take the fight to Democrats on the ground that they are contesting in real time. So it could be we can see the president not just potentially boost Corey Lewandowski there, but also sort of try to meddle a little bit in the Democratic primary, for lack of a better word, by picking some favorites, maybe giving out some new nicknames as well.
So, Caitlin, to follow on what Zeke was saying about President Trump's visit to New Hampshire, what will you be looking for? What can we expect to see there?
Well, it is this weekend also a lot of Democrats are campaigning there as well. What's interesting is that Trump did lose the state by fewer than 3,000 votes, as Zeke mentioned, wants to compete there again. But how he addresses issues that he campaigned on in New Hampshire, the opioid crisis, of course, is still an issue that New Hampshire voters really care about. It's something that most of the Republicans, including Donald Trump, talked a lot about when they were there. We might want to hear from the president about where we are on that and what has been done and more to do as well.
All right. Caitlin Huey-Burns, Zeke Miller, and Heather Long, thanks to all of you for being with us.